ESG stands for environmental, social, and governance. These three factors are used to evaluate how sustainable and socially responsible a company's operations are. Essentially, ESG investing is about putting your money where your values are. It's about supporting businesses that are working to make the world a better place, while also aiming for competitive financial returns. Environmental factors look at a company's impact on the planet. This includes things like its carbon footprint, waste management practices, and efforts to reduce pollution. For example, a company investing in renewable energy would score highly on the environmental factor. Social factors consider how a company treats people. This encompasses its relationships with employees, suppliers, and the communities where it operates. A company known for fair wages and safe working conditions demonstrates strong social responsibility. Governance relates to how a company is run. This covers areas like executive pay, board diversity, and transparency in decision-making. A company with a diverse board and ethical business practices reflects strong governance. In today's world, sustainable investing is more important than ever. Investors are increasingly aware of the impact their money can have on global issues like climate change, social injustice, and corporate misconduct. They are looking for investments that not only generate profits, but also contribute to a more sustainable and equitable future. Consumers are also becoming increasingly conscious of the ethical practices of the companies they support. This shift in consumer behavior is pushing businesses to prioritize sustainability, further emphasizing the importance of ESG considerations in investment decisions. As awareness of these issues grows, so too does the demand for investments that align with people's values. This shift towards responsible investing is creating a powerful force for positive change, encouraging companies to improve their ESG performance and contribute to a more sustainable future. ESG investing is not just about doing good, it's also about making sound financial decisions. Studies have shown that companies with strong ESG practices often outperform their peers in the long term. This is because they are better positioned to manage risks, adapt to changing regulations, and capitalize on emerging opportunities. For example, a company that has invested in renewable energy is less likely to be affected by rising oil prices. A company with a diverse workforce is more likely to be innovative and adaptable. And a company with good governance is less likely to be hit by scandals or lawsuits. There are numerous examples of companies benefiting from strong ESG practices. Tesla, a leader in electric vehicle manufacturing, has seen its stock price soar in recent years, fueled by growing demand for sustainable transportation solutions. Unilever, a consumer goods giant, has been recognized for its efforts to promote sustainable sourcing and reduce its environmental footprint, leading to increased brand loyalty and consumer trust. These companies demonstrate that financial success and sustainability can go hand in hand. By integrating ESG factors into their business strategies, they are not only mitigating risks, but also unlocking new opportunities for growth and profitability. Section 5. Benefits for individuals, aligning values with investments. For individuals, ESG investing offers a way to align their investments with their values. It allows them to support companies working to address issues they care about, such as climate change, social justice, or ethical business practices. This approach to investing can provide a sense of purpose and satisfaction, knowing that their money is contributing to positive change while also seeking financial returns. Furthermore, ESG investing can help individuals mitigate risks in their portfolios. Companies with strong ESG practices tend to be more resilient to environmental, social, and governance challenges, which can translate into more stable and sustainable returns for investors. Section 6. Benefits for companies attracting investors and driving growth. ESG is not just a trend for investors. It's a fundamental shift in how businesses operate. Companies that embrace ESG principles are not only doing the right thing, but they are also positioning themselves for long-term success. They are attracting investors who are increasingly looking for companies that prioritize sustainability and social responsibility. Moreover, ESG-focused companies are attracting and retaining top talent. Employees are increasingly drawn to companies that share their values and are committed to making a positive impact on the world. This can lead to increased employee engagement, innovation, and productivity. Section 7, ESG Navigating Potential Challenges. While the benefits of ESG investing are clear, there are also challenges to navigate. One challenge is the lack of standardized ESG ratings. Different organizations use different methodologies to assess companies' ESG performance, making it difficult for investors to compare companies on an apples-to-apples basis. Another challenge is the potential for greenwashing, where companies exaggerate their ESG credentials to attract investors. To overcome these challenges, investors need to conduct thorough research, engage with companies directly, and potentially seek guidance from financial advisors with expertise in sustainable investing. Section 8. The Future of Finance, ESG's Transformative Potential. ESG investing is not a passing fad. It represents a fundamental shift in the financial system. As more investors demand transparency and accountability from companies, ESG factors are becoming increasingly integrated into investment decisions. This shift is creating a more sustainable and inclusive financial system that benefits not just investors, but also society and the planet as a whole. Governments and regulators are also playing a role in promoting ESG investing by implementing policies that encourage sustainable business practices. As these trends continue, ESG investing is poised to become the norm, transforming the financial industry and contributing to a more sustainable and equitable future. Section 9. Conclusion: Embracing ESG for a secure and sustainable future. ESG investing is not just about making money, it's about making a difference. By investing in companies that are committed to environmental sustainability, social responsibility, and good governance, individuals and institutions can align their financial goals with their values and contribute to a more sustainable and equitable future. As awareness of ESG factors continues to grow, and as more companies embrace sustainable practices, ESG investing will play an increasingly important role in shaping a more secure and prosperous future for all.